Naomi's last minute question number 2 reads, I remember hearing someone mention the further back you go, the more that data loses its value in terms of backtesting, that more recent is more relevant to in how the markets move. Do you therefore weigh your results? For example, say we have a lot of hit targets from 2009 to 2013, but far less from 2014 to current day. How do you weigh the results? Interesting question. And the answer to your last minute question number 2 would be yes. The further back you go in time, data loses value as far as in comparison to current performance. So I don't want it to seem like it's not valuable. It is extremely valuable. Is it valuable to today's market necessarily? No. However, we have to understand that market conditions are always changing. And one day, right? How many of you guys plan on trading for a long time? Right? One day, your 2019 data, guess what? Is going to be old data. Right? One day, the market conditions aren't going to be the same today as they are 10 years from now. The importance of testing historical data is to make sure what you're doing works over time. It has longevity. It is able to withstand different market conditions because market conditions will change. Again, one of the best examples I can give, I think it was back in 2007, 2009. It was a very trendy years for the euro dollar, right? Very directional. If you were a trend trader during that period of time, guess what you would have done? You would have cleaned up, right? It's the same thing like in the stock market. If you would have invested anywhere in the stock market from between last year and the prior 5 years before it, you would have made a lot of money just by buying anything, basically. Right? So if you're a trend trader, your system or strategy is performing phenomenally. However, in current times, fast forward to 2019, how do you think that same trend trading system would perform? Given the state of our current markets and its sideways shuffle. Better, worse? Probably worse. So, it's important when you're doing backtesting to see that what you're doing can be sustainable over time. Because there's no point of trading good for, if you have a strategy that only works in 2019 but won't work 3 years from now, you're going to be in a lot of trouble, are you not? You may find yourself in a position where you quit your job, you went full-time trading, you're managing money, and all of a sudden your system or strategy doesn't work, and now you're in a bad place. You got no fallback. So the importance of historical data is to see that, hey, maybe it works better in some years than other years, right? You can kind of get an idea for, hey, it works better in this type of market versus that type of market. But overall, you want to see that you can at least survive the bad years. You want to see that your system maybe does great some years, does okay other years, but in no year does it really get like destroyed and blown out the market. No type of like account blowing type of deal. So yeah, historical data, it loses value as far as in comparison to what the market conditions are now. But I still think it's very, very valuable overall as far as the longevity of your trading goes. Because you need to make sure that what you're doing can last over time. And again, I think that's one of the issues that many newer hotshot traders get involved in, right? They trade something today that works fantastic. They over leverage themselves. They make 3,000% a day or 300% a day. Someone just promised me that. If you guys were following me on Twitter yesterday, right? Somebody promised me 300% a week or something like that, something stupid. They do all that, and the market conditions change, right? And they get blown out the water and they're broke. So it's very important in my opinion. It may not be it may not be relative to today, right? The performance in 2009 may have nothing to do with the performance in 2019, but bigger picture, it's important to know. It's important to know that you have something that can last. So I'll tell you what, pattern trades aren't working the same way they did back in 2012. I've seen the win rate and profitability decrease over the last 5 years. Will it come back? Who knows? But it certainly hasn't been the same. Good question. All right. Anything else on that? How do you adapt to these changes? You consistently review your trading. You consistently review your trading. You Kaizen philosophy, you just consistently try to get better as a trader. You never settle. You never have one thing that works and you say that, hey, this is it. This is good. I'm going to do this forever. You always try to get better. I've consistently evolved as a trader. Go back to my YouTube page and watch the videos I did in 2009 or whenever I started doing videos 2012, and you're going to see I'm completely different. I've blossomed. But it's just always changing. It's paying attention to what the market is doing. It's learning. I think if the more you master the skill of trading and not just a strategy, but the actual skill of trading and reading a price chart, the easier it's going to be for you to adapt. Because price is king at the end of the day, right? If you can read what price is doing, you can adapt to any market condition because price doesn't change. It may change in the way it moves, but it still only does three things, right? It extends, it consolidates, it pulls back. It does three things. There's only three types of candlesticks, right? I told you in the foundation course, right? High Momo. There's strong, neutral, and weak. Being able to do those things will allow you to interpret the market in a beneficial way no matter what the conditions are. Whether it's consolidation, whether it's directional, it's going to allow you to grow and evolve as a trader and really just continue to develop your style to take advantage of all market conditions.